Goldbroker.com own real physical gold and silver bars stored outside of the banking system.
Good morning. On behalf of Goldbroker.com, I have the pleasure today to speak with David Morgan. David is a precious metals analyst with degrees in finance, economics, and engineering. He created the silver-investor.com website and originated the Morgan Report. He's also with Chris Marchese, the author of a new book, The Silver Manifesto. Hello, David.
Hello, Dan.
I have here the book. I just had a chance to go very fast do a first reading, and I was very impressed. And I have a few questions that I'll ask you about it. Let's see first. What do you think about the market today? It seems that both gold and silver are moving up. They broke last 2 weeks ago the downtrend, and it was actually silver that led the breakout. What do you think about it?
Well, one, I hope you're right. I mean, I'm a little frustrated, like everybody in the precious metals sector, about how long these low prices have been in the sector. But I do think the bottom's in. I think that November of last year was the absolute bottom for this run. In other words, not counting the beginning of the market where silver was under 5. I'm talking about this last 4 years. This is the bottom. Could be wrong there. When silver leads gold, that's usually a strong indicator that we're finally on our way. There's always an argument about, gold leads silver, silver leads gold. I used to be pretty much of the school that silver led. But since then, there's more data available. People can change their opinions, or the market or evidence will change their mind. And the evidence shows now that at times gold leads and silver at times also leads. So I think, again, that because silver led gold in this case, we're probably, one, seeing the actual bottom for this intermediate term. And secondly, can't expect higher prices over the longer term.
Seems that there's a very strong relation. Some people have been arguing in the last few years that gold is different than silver, that the ratio doesn't work anymore. What do you think about it? Because it seems to me that they follow each other, or one leads the other one. Even though we have now silver being more an industrial metal, and gold remains just monetary. I think it has about 10% industrial use. But they still have a very strong correlation. What do you think about their correlation?
I think we should just talk facts. The fact is that the correlation between gold and silver is 85%. That's extremely high. 85% is extremely high correlation. So that means through all of the deflationary scares, inflationary scares, QE 1, 2, and 3, what the ECB is doing, it doesn't matter as far as which one performs better because they're so highly correlated. Now, as far as the ratio is concerned, we can just talk to it as a fact. The fact is it's a way to measure which metal is outperforming the other metal. If the ratio becomes lower and lower, such as 35 gold to silver ratio, that means that from this point to that point, silver has outperformed gold. Right now, when we started the uptrend in the markets, silver broke out in September 2003. The ratio was 80 to 1. Today, it's in the 70s. So from that starting point, silver's actually outperformed gold slightly. I expect that silver will outperform gold when the market top is finally achieved, but that doesn't guarantee it. However, again, the correlation being, the main problem with silver is it's so volatile and the moves are so extreme up and down. So unless you actually can hedge or use the silver ratio to your advantage or purchase both metals, which is what I recommend, then you can really, have a very difficult time unless you're an extremely seasoned investor, because the moves in silver can certainly be scary at times. So I actually think that most people deserve to own both metals. I think if you don't own silver, you're missing some very leveraged position just by owning the metal outright, because it's so volatile and because when the monetary crisis continues to get into the consciousness of the investing public, we see a lot more people move into the silver market than the gold market. Gold will be moving away from their ability to buy it. So those are my ideas on the gold and silver ratio and also the correlation between gold and silver.
Yeah, I found it very interesting in your book. You have a graph, actually 3 graphs, showing the ratio going 5,000 years ago. And we see it going, there was around 2.5, 5,000 years ago. 2,000 years was 12. 1600 to 1800 was about 15. And after 1800, what's interesting, you look at a chart from Jastrams that he created. You look at it, and it became incredibly volatile, going from 12 to 100. It seems it's just incredible. What do you think about that? The change, which is quite correlated with fiat money.
Well, absolutely. That's a great insight, and that was one of the points showing the chart. And the others I'll borrow from Franklin Sanders, another silver aficionado that wrote The Silver Bonanza in the early 90s. And what he states, and I'll restate, is that if you took a chart, a graph, and you put a big line in this great big chart in an auditorium and represented every 100 years as 1 foot in length, you would have 35 feet for 3,500 years. And it'd only be in the last foot of that chart that the silver gold ratio would go above 12, or excuse me, above 15. So think about that from a historical perspective. I'm talking long-term history. For thousands of years, that ratio is below 16 to 1. It's only been in the last 100 years or so that it's gone above that. Now, from an academic's point of view, that's extremely interesting, as you're pointing out, Dan. From a real life perspective, well, most people don't live 100 years, so it's very important to appreciate that. But the point I'm trying to make is that for most of monetary history, the ratio is actually determined by the marketplace and the amount of silver and gold out of the ground, rather than a monetary edict that says, well, it should be 15.5 to 1, because that's what it was on Tuesday when I stepped my finger in the marketplace and asked the market what it was. So very much indicates that silver is undervalued, even relative to gold.
You have a chapter in the book which is very interesting about the debt bomb. And I found it interesting because in 2004, when I got interested again in gold, it was because of an article in The Economist about global debt that woke me up. And I started asking, where the hell have I been for all this time? And you talk about it. Also combined with it, the US dollar collapse and a monetary reset. Some people try to exaggerate and say that we're talking about the end of the world, when in reality it's just a reset. Can you explain a little bit the relation between the time bomb and the collapse of the dollar and gold and silver?
Yes, I'll do my best. First of all, the thing to understand in the financial collapse is that we're talking about a paper monetary system collapsing. All the wealth stays in place. All the churches, all the schools, all the roads, all the factories, all the land that has agriculture on it, all the dams, all the power generating places like coal plants and nuclear power plants and hydroelectric plants, they're all there. That's real wealth. So all the wealth is there. It doesn't disappear. It doesn't burn down. It doesn't go away. So what does happen? What happens is there's a huge monetary problem, or a fiscal crisis, if you will, around the monetary system that doesn't work. So what happens is it needs to be reset. We really witnessed this after World War II and the Bretton Woods Agreement, where the U.S. became the reserve currency of the world. What we're seeing now is a shift into this AIIB bank, and we're seeing the BRICS, and a lot of people joining the BRICS basically with this development bank, which really I think has a better outlook and attitude toward the monetary structure than what's really been taking place in the Anglo-American Empire the last several decades. And this is what will take place. That exactly, no, I don't know that. But that's the direction we're moving. That's something clearly in our view that we can see. And what will take place is what happened when the pound sterling lost its power. It shifted to the United States. And basically through history, if you look at it closely, whoever has the most gold is the predominant currency. And that could be China, because we really don't know how much gold China has accumulated. They're pretty secretive about how much they really have and how much they actually buy. But certainly the United States probably doesn't have the amount of gold that it states that it does. And China probably has more than it states in the public domain. So I think the shift is going from west to east. I've been seeing that for many years. But a financial collapse doesn't mean a physical economy collapse. The physical economy remains. It's a big problem because some currencies will be lower vis-a-vis other currencies. Gold and silver will probably run up substantially. There'll be a lot of gnashing of teeth, a lot of pain and anguish, but nonetheless, human beings are geared for survival. They will. It can be worked out. And in the back rooms of the power elite, they probably have certain plans. Whether or not they work out to the way they, forecast or not, or want them to, remains to be determined. But people, again, are survival minded and they will work it out. People by themselves, left alone, not dictated to, actually work things out quite well and usually in a very peaceful manner. It's only when you have these power mongers that want to rule over everybody and dictate exactly how things should happen is when you get into situations that we are now and you have a struggle for power. And that means they will stop at no limits, which indicates a war-mongering attitude, which of course we're witnessing and have for quite some time.
Do you see any change? Last week, actually this week, France introduced new rules to control cash, not allow more transactions. I know in the United States and Canada, we've done it actually in the 90s. They've started, I remember working in the banking industry, and we were asked to verify any transaction beyond 10,000. Then they switched after September 11 to if you've done multiple transactions, they still have to report it. And now we see France doing that and putting a limit of 1,000 euros. But also what I've read about France is that you have to also declare transactions in gold, movements in gold, which seemed that, because I looked this morning to the data from Switzerland, and we seem to think about Switzerland, the gold going into Switzerland and then going into Asia and China. But there seems to be a lot of gold staying in Switzerland and being a lot of vaults being built in Switzerland. So do you think in the United States, you live in the United States, there will be some kind of a control of checking the buying of silver and gold?
It's possible. So we want to roll it out. I mean, these people are all power and control based, and money is power. So if you can control the money, you control a great deal of the power base. And that's really what it's all about. And of course, gold, they don't like to acknowledge and they don't like to admit it's the ultimate money, but it is. And of course, now they will do whatever it takes to stay in power or have the power or the control. And so could it happen in the US? Of course it could. Will it? Possibly. On the other hand, we're facing this breakdown that's probably going to take place mathematically. It's a certainty. So we're kind of in a very interesting place in monetary or in history in general. How is this going to unravel? And it seems like the more they try to gain control on our financial transactions, the more the system as a system is unwinding. So you have two things happening at once. You have them grabbing for more control as the whole system is losing control.
There's a lot of talk about manipulation of the price of gold and silver. Do you think they are related, the two of them, or is it mostly gold manipulated by the governments and silver manipulated by the banks?
No, it's both. I mean, they're both manipulated. As I said, the correlation's 85%. If gold's manipulated, you couldn't have that strong correlation without silver being manipulated. If silver took off on its own and went sky high and gold didn't go sky high, then there'd be the market would say something is drastically wrong here because they do move together. So most people, whether they admit it or not, they do have a strong correlation. So if you're going to manipulate gold, you have to manipulate silver or vice versa. That's just the way it is. I think they both are. I actually think in some circles, silver is probably the Achilles heel, meaning since it's outside the financial system now, gold is officially but unofficially, it's very much a part of the financial system because major countries are accumulating gold, want gold, track gold, own gold, have it as a reserve, etc. Whereas silver doesn't have any of those roles. So really, it's less controllable by the power elite than the gold market.
I've seen some data about the coin buying in Europe and in the United States. It seems that in the United States, silver is preferred to gold, while in Europe, they've been buying much more gold coins than silver. Is that what you see also in the United States, a preference for silver coins?
Well, it's true, and I think it's not based on so much a preference. My point being, Dan, is that you're penalized buying silver in Europe. There's a value-added tax in most cases. And because there's a value-added tax, that discourages you from making that purchase. So someone that wanted to purchase precious metals might look at the advantages or disadvantages, or maybe perceive that silver actually has more upside than gold. But then when they go to look to purchase it, and they say, well, I have to pay 17% value-added tax right from the get-go, which means I've got to overcome that amount plus the dealer fee. So it might be a 20% premium. And well, I could just buy gold. There's no premium to it. Excuse me, there's no value-added tax to it. I will move into gold. I think it's deliberate. I mean, there aren't many commodities that have that kind of negative situation with them. In other words, having a VAT on one of the metals and not the other is rather interesting, at least in my view.
Okay, David, sorry, that's all the time I have. And on behalf of goldbroker.com and myself, thank you very much. And have I hope, successful gold year and silver.
Dan, thank you very much. It's been my pleasure to be with you.